Good afternoon, all. Camelback Trading 2724 coming to you this Friday afternoon, May 15th. We're looking at the market profile of the SPY ETF here on Window Trader. And a very, very mechanical day today, especially early on. We go out with a price probe again. Remember, we went out with a price probe and a price spike yesterday, only to have both of those rejected this morning. We traded some very, very visual areas, very mechanical areas where we for sure knew there was short-term traders in control. Volume 97 million with the after hours. The average is 104. It's going to be the least amount of the past 3 days. We'll probably do about 105 million. Decent finish though for the week for the bulls. Even though we closed at 286.28. So we're down a little over $6. But again, considering where we were yesterday morning, I think they have to be happy. And right around that 287 level. We had a very good day today in the Camelback trading room. Let's start with what I did and what we were talking about in the room today. So A period. I said this morning, I said until we get things decided, there's nothing much to lean on. You're going to get a lot of chop, especially where we opened up. I said I'd look for the afternoon pullback low for the first thing, and then possibly a sale up at the price spike and price probe from yesterday that were being rejected. So what did the market do today? It traded, opened, traded right down to around the price probe, never got it. Started going back up right above the opening. I took a long looking for the base of the price spike, and I got it. It was a nice trade. And then right after that, we got up to L's high, which is the price probe, came back in, took a short, and took it back down. So two trades based on very firm market-generated information. First one being the afternoon pullback low, which we didn't get to, and it wasn't much to lean on, but it was more to lean on since we didn't get to it and went above the opening to take a long. And then again, after the probe and spike were rejected from the previous day, once A came right back into below L's range, took a short down. So that was very nice. B period. Took a long when I said, it looked like we're going to pop A's high, start one-time framing up and get above the price probe. Took the long right up to yesterday's high. That was a very nice trade. Now, the one trade I didn't take, which would have been very nice, and I'm going to blame my lunch for getting in the way. Now, we traded down in C, D, and E balanced, right? We dipped below the opening twice in D and E. Now, the only reason this market came down in those three time frames is some type of tweet or whatever by Mnuchin said something, or Kudlow, one of them said something, which caused this market to come down. Sellers had their chance. If this was real selling, they couldn't even get the day's low, let alone stay below the opening. Now, I didn't do anything in C, D, or E. F period, when F period started, I told the room, look, balanced. We had an inside bar. We came out of above the opening, the last two time frames. It said as long as F does not take out E's low, if it breaks E's high, that's a long, at least back up to the price spike and the price probe. And lo and behold, as I went to go make lunch, that's exactly what we did. So that was a very, very nice trade for people who took it. I then took a nice long trade in G period when it pulled back. Right? Pulled back, tape it off. Again, we're one-time framing up. I was eventually looking to take out the day's high. Held on to it. Actually, I'm trying to think. I stayed long, I believe, up into H's high. I did. So I got long in G and H and then got out even. I'm sorry, even. I got out at the day's high when we made a new high. Now, then I got myself in a bit of trouble playing Innovator. But it worked out. So this is what I did. We popped up in H, came right back in after I got out of my long. It was a very nice trade. I period got one tick above H's high. It was a poor high. I thought the odds, now, I didn't do anything up here yet. I period came down, and I thought there was a very, very good chance that we would stop the one-time framing up and I would look for the afternoon pullback low. Value went from unchanged today to overlapping to high. It just missed higher, but it still ended up overlapping to high. I'm in 5 or 6 tick increments, you can't tell, but value low is right around here. When you put it in tighter increments, it distorts the value price. So instead of waiting for confirmation for I to take out H and get on board with a short, I took a small 20 contract put play. And the only problem was I decided to play the 284 puts because I was looking to get down to here where our POC was at the time. And again, they expired today. I bought 20 of them around I's low. Bought another 20 about here. I bought 50 up around here. Now I was only long 90. Excuse me. But they were in the red. And then what happened, what I didn't want to happen, happened. J ripped higher. Now, I could have taken a loss, whatever. I didn't do anything in J. Actually, that's not true. I took a bigger position here, so I was long 90. I bought 300 more, right around J's middle. I was long 390. Went up again. I bought more. K went up. Couldn't take out J's high. Started rolling over. Ended up buying another 500. I was long just about 1,200 of the 284 puts. In a hole pretty good. The question was, I did not want to see K. Now, we had single prints. There were singles at that time. What was keeping me in this trade? A couple of things. You're not going to see it now, but when J shot up and K shot up, there was poor structure over here. If these were in 1 tick increments, we had a couple of price points that weren't traded at. I've never seen them hold. I'm not saying they're not going to hold one day, but I rarely see them hold. So I had that to hang my hat on. The other thing was, at the time when I first started this trade, the indices were flat to down. And they started ripping. That started going against me. I wasn't comfortable with that. But there was nothing for the to lean on the way down unless these single prints held. And by that I mean we didn't have an afternoon pullback low yet. The POC was being raised, but we were only 6 or 7 wide. So I thought if these single prints do not hold, we're going to have to pull back to get either an afternoon pullback low or get the POC to around 9 wide. Now, if the single prints held, I was in a world of trouble. But the tempo absolutely started slowing at J and K's high. And that's when I added on the other 500 to put me along 1,200. And then when they started coming in, now remember, they were expiring today. So each half hour that went by, I, J, K, L, they're deteriorating, even though the market's starting to come in. And then finally, anybody who was long in J, K, and L up here, as soon as we got back to the initial balance, the floodgates opened, rode it all the way down, and ended up with a nice trade. The risk reward wasn't great. What I made was very nice, but not close to what I was down up here. But it worked out. That's the innovator in me again that got me in trouble to start. And that was the last trade of the day. It was a good trade. It turned out to be good. We just had tremendous chop again then in L and M price probe. All right, destinations for tomorrow, or Monday, I should say. 286.33, today's high. Then 287.19, daily high. Above that, 289.56 price probe from May 12th. Single prints, 289.90 get filled at 290.24 from May 12th. And the price spike of 290.50 from May 12th. For the downside, we have today's price probe, which is J's high, right? Yeah, I said L's high. It's J's high. I apologize. I wrote down L's high. It's J's high of 285.96. That's your price probe. Okay? Then on the downside, it's your afternoon pullback low at 284.37. Today's low of 281.34. Afternoon pullback low, which held nicely from today, of 280.10. 105, and then the weekly low all the way down here of 276.37. So yes, we stretched the weekly low, but we're firmly back in balance. Now, let's go to the charts. Monthly, halfway through the month, still an inside month, still right above the trend line. So the bulls are hanging on there. Here's the important one. Weekly, 3-week balance. Okay? The high is 294.88 3 weeks ago. The low is 276.37 this week's low. So the bulls had a chance at the top of a balance, didn't get to it, we rolled over. The bears had a chance extending the balance to the downside and came back in. I thought for sure the odds of taking out these 2 weekly lows in the low 270s were going to be very good if we took out last week's low. Well, we didn't. So we're still in a 3-week balance. We're still dealing with this 287 level. And then on the daily, a 26-day balance. Now, yes, it's a 3-day balance. Remember the way we were doing earlier in the week? I said what the bear's job was to take out this 3-day balance low, then this 2-day balance low. So you can break it down into smaller balances. So yes, this is a 3-day balance with 287.19 the high and 281.34 the low. However, the bigger picture is we are jam stuck below the 300, above the 50, and in a 26-day balance. Yes, we have to take out these balances before we take out the highs or low. No doubt. But the bigger picture is, which one are we going to take out? If we take out this one, we could, this is a powder keg forming here. So are we going to be that good on the upside where we explode up to 300 and beyond? Or are they finally going to give it up and get below the low 270s and go back lower and maybe for this gap from back in early April? That's the question. I hope you had a good day trading. Come check us out at camelbacktrading.org. Have a great weekend, and we'll speak prior to the opening on Monday.